Okay, Your Excellency, great conversation, great context there, and setting us up for the very first session of the day. And it is my pleasure to welcome Waleed Mokarrab Muhairi, Deputy Group Chief Executive Officer at Mubadala Investment Company. They know a thing or two about risk, and they've got $1 or $2 to deploy. So let's get straight to it, Waleed. Thank you for joining me. We're in the final stretch of 2021. There's a wall of worry mounting as we're speaking to one another. Give me your perspective. You're in America at the moment. Are you still confident about growth, U.S. growth, and global growth going into 2022?
So greetings from New York, and thanks for the question, Manus. It's great to see you. So from my perspective, here's how I would think about that. So right now, when you look at the underlying fundamentals in terms of what growth looks like worldwide, not just in the United States, but in all the major economies, obviously at different rates and at different trajectories, you see pretty strong fundamental tailwinds that point towards growth. And so we see that in almost every major market that we look at. And you know, whether that's as a result of some of the fiscal policies, stimulus that we see, the monetary policy, the underlying robust performance of some of the large businesses that we see, so far things seem okay. But like every major prediction, you know, you have to qualify it a little bit, and you have to say that there's a but there, right? And since I can't read the future and my tea leaves are as good as yours, you know, I would say, listen, there's stuff that people worry about. You worry about things like inflation. And you worry about, you know, how that's going to play out over the next, I would say, 6 to 12 months.
Do you think, I mean, look, the word stagflation is much used and has been over the past sort of 10, 15 days. Do you think we are going to see a stagflationary period?
So Manus, I'm not an economist, but I can tell you what I see on the ground. So right now, especially when you come to the United States, you see a period where, you know, on the one hand, you see a pretty tight labor market. So you know, I just heard an interesting statistic. For the first time in a very long time, you are seeing that job openings, so people who want to hire, exceed people who are looking for work by something like 3 or 4 million jobs. And so that tells you that the labor market is still pretty hot. And by the way, that's across many different segments of the labor market. I'll give you some examples. You know, so I was walking around New York, and you know, restaurants are, you know, they're full. There are lots of people there, but sometimes service is really slow, not just because they're packed, but because, you know, there's fewer wait staff, there's fewer folks just in general in services. And so a lot of opportunity that needs to be matched with people who will, you know, work and help fill that up. So I think there's a lot of runway before we start hitting things like stagflation.
Okay, so there's a little bit of runway there. You say, look, there's always a caveat, and the debate in Washington, a little bit further away from you there, is about fiscal stimulus. Waleed, to what extent is your outlook built upon the view that you will get sizable fiscal stimulus in the U.S.?
So again, we can't predict exactly when that's going to end. But here's what we see. We all listen to the Fed, right? So we've all listened to the chairman of the Fed. And what it sounds like, without knowing the future, is that stimulus, soft monetary policy, right, is going to be here to stay, and it's going to be encouraging. So I think what that means is that for the time being, at least, I would say for the next couple of quarters, you're going to see pretty accommodative policy, whether it's fiscal or whether it's monetary. And so that's likely what's going to happen over the next, I would say, 6 months. Beyond that, I can't predict. So I don't know what's going to happen. Right now, you know, you see a new word that has been introduced into the inflation vocabulary called transitory inflation. And so that's there. And what that means is some people think, again, economists who study this for years seem to think that even if inflation tends to rear its head, it's going to come back down again relatively quickly. And so I think what a lot of folks are saying is, well, if you believe that, then the investment climate, the investment environment is going to be pretty okay and pretty encouraging, I think, for the next, you know, 6 to 12 months. But again, Manus, you and I have done this for a long time, and we both know that there are a lot of curveballs that you know, can come out of left field, and so we just don't know what's going to happen. So it's important to obviously keep deploying capital. We as investors are looking at that. But at the same time, we always think about what the rainy day looks like. And in this case, inflation is an important element of that rainy day.
Listen, you've given me a lot there. I'm surprised that your time horizon, Waleed, is only at 6 months to 12. Right? That to me is very short. But can I ask you, does that monetary policy, fiscal policy combo that you've just laid out to me with the time horizon for risk, does it still make USA #1 destination for allocation of capital?
US has been and continues to be a really important destination of our capital. And so, look, the way that we think about that, it's so obviously, you know, the fiscal and monetary policy that we just talked about is important, but what is more important is risk reward. And that's the lens through which we look at how we deploy capital. And so when we do the risk reward calculation and think about, hey, listen, I want to deploy in this particular sector this amount of money over this horizon, we do it when that equation works out, right? And so when the return is commensurate with the risk that we are taking, obviously we will look favorably. And right now, we believe that the US is that. So it is favorable. And again, we think the fundamentals are strong. Now making a statement like that doesn't mean that markets may not correct. I mean, let's look at today, for example. The market is red today, right? And you could see that you know, even stocks like Facebook, you know, which have been you know, darlings for the last year and a half, are not doing so well because WhatsApp, Instagram, and their entire social media platform happens to be off the air. And so stuff will move up and down, right? And so notwithstanding that, we still do think that there's a lot of tailwinds, at least for the foreseeable future, and risk reward seems to be okay. But you have to be careful, right? And you want to make sure you don't overpay for things. And so again,
but let's just contextualize risk reward, Waleed, because from what you, correct me if I'm wrong, from what you've just said, it might almost be a healthy thing if there was a little bit of air taken out of the tech tires, so to speak, in the US. I know you've got an IPO. We'll talk about that in a moment. Would you welcome a moderate drawdown in big tech? Do you think that would be healthy?
Yeah, it's not about welcoming. It's that I think it's a matter of time before it's going to happen. So you know, corrections always happen. What I can't tell you is it going to be a 2% correction, a 5%, a 7%, whatever it's going to be. But you know, these things, man, come in cycles, as you know, and so there will be a correction at some point. But I think the key again, when you put your investor cap on and you have the investor mindset, you know, if you deploy capital in good companies that are leaders in their field, you're going to do fine as long as you don't overpay, right? And so that's the equation that we always have to be focused on.
Let's talk about one of those rewards that you're going to offer to a variety of potential shareholders. GlobalFoundries, the IPO, you pulled the trigger on that, as I understand. Can I ask you why now? You know, this is a long time in the planning, but why now?
You know, Manus, you can appreciate that there's not a lot I can say about the GlobalFoundries IPO because we are in a quiet period right now. Yeah. And so what I can say is that this is a core company to Mubadala. It's a company that's been a key holding for us for many years, and we are all hoping for the best. So we think that we are well positioned from a sectoral perspective, and that this company is a leader in its space. And unfortunately, that's really all I can say at this point.
Well, let me go at it from a slightly different point of view, because our global audience are going to want to try and understand valuation here. When I look at GlobalFoundries, it's a U.S. chip manufacturing business in a world which is becoming more polarized between the United States on one side and China on the other. His Excellency Gargash talked about the potential for a Cold War last night. So do you think from a valuation, a risk-reward point of view, to use your words, that in a more polarized world, a U.S. chip manufacturing business becomes more unique in value relative to other options for global investors?
So I can't address any points relating to valuation, Manus, but I think yes, think about that as a strategic rationale. It makes a lot of sense, doesn't it? And so it does resonate.
And in terms of the overall chip global shortage, this is a theme that we've explored many times here on Bloomberg. What can you tell me about that? What are people saying to you? What is the latest view that you have on this global phenomena?
So Mubadala has always been a firm that has believed in partnership. And so when you have stressed supply chains, when you have issues where folks need to come across the table, it's a lot easier when you have that kind of partner set mindset and point of view. And so I can't think of a time in the history of whether it's GlobalFoundries or frankly any other producing asset that we have where partners will come to the table, we'll have a discussion, and we'll figure out ways to meet their needs. That's what any first class, I think, client-oriented business would do.
Part of the reason why you've agreed to talk to me and you're part of this family discussion is about capital deployed here to the GCC, to Abu Dhabi. And what went through my mind, which was here is yet another piece in the depth and liquidity story for Abu Dhabi. GlobalFoundries will, in my humble opinion, add to that depth and liquidity. Is that part of the bigger narrative, Waleed? Is this an important step in that IPO, that series of IPOs?
So if you think about the Abu Dhabi market and you think about some of the changes that are happening on the ground in the UAE, one of the things that I can tell you unequivocally, Manus, is that if you just look at some of the regulatory changes that have been put in place, I would say over the last 12 months, you'll see that the pace and depth of those that are geared towards opening up the economy, making us more competitive as a nation. I mean, I've never seen this pace of change before. Right. And so when you look at that combined with increased IPO activity, especially on the Abu Dhabi exchange, you're seeing just one company after the other that's coming to market. I mean, it creates a couple of different things. Number one, it allows for the privatization of assets, which I think is great. Number two, it helps create wealth. It helps create wealth for both UAE nationals and residents, and frankly, anybody who would like to come invest into our markets to participate in I think that prosperity. Number two, and then number three, you're seeing the ability for folks to move in to our country just because of our safety, our track record, and because of the way that we've handled COVID. In addition to the fact that folks can own their businesses and obviously list them and do what they need to do, it is a very investor-friendly destination, and I think in many ways is reaping the benefits of I think what we've seen during this COVID era. So I, for one, am incredibly excited for what the prospects for Abu Dhabi and the rest of the UAE look like, both from a competitive perspective and from a capital markets perspective, I would say over the next few years.
Well, certainly there's a raft of IPOs, and we've covered them. So we wish you well and every success with that. Time is always the thief in these conversations, and I have two big subjects that I want to try and just glean your opinion. Xi Jinping has shifted his policy to the common prosperity. And for weeks, nay months, we've debated about the investability of China. I mean, he's ripping up the rule book on schooling, housing, and tech. Broad topic, short question. Is China still structurally and fundamentally investable for you, in your opinion?
Short answer, yes. So absolutely, things are changing. There's no question about it. So we have an office in Beijing. We have folks that are on the ground trying to really understand what's happening. But again, this is the second largest economy in the world. It is still growing. So far, we have not encountered any resistance from an investor perspective. I think you need to be careful. I think you need to rethink a little bit what risk reward looks like. And because we don't have all the answers yet, and because I think that story is still TBD, if you will, it's still developing. We're still trying to figure out where it's going to land, but we are still investing. We are still deploying capital in China, and we think that in many sectors the fundamentals are still pretty strong.
What is the most appealing sector for Mubadala in China, given the volatility?
Well, I can tell you one right now. We're looking at a couple deals. So we are now making a little bit of a life sciences push into China, and it still looks very, very attractive to me. That's one example.
Okay, and that's one of the big topics that I want to get an idea on. I'm also seeing, in my humble opinion, a pivot to Southeast Asia at a federal level from the UAE. I saw it with Minister Bintuk a couple of weeks ago, into South Korea, more into Africa. And I want to get a sense from Mubadala's capital deployment point of view, will you follow as it were, Minister Bin took in deploying more capital with more of a pivot to Southeast Asia, perhaps, than to developed markets? Is there a lean? Is there a shift?
Manus, it's not a pivot. It's integrating into the centers of economic growth. So we are investors, so we follow growth. So obviously we're heavily invested in the United States, but you can't ignore the massive economies in Asia. You can't ignore growth hotspots around the world, whether it's China or India or other places. And so clearly our portfolio has to reflect that. Otherwise, we are literally missing out on opportunities. And so, it would not be correct to coordinate, to characterize it as a pivot. Rather, we're continuing to invest in the United States and deploy capital there, again, for the reasons that I mentioned earlier. But we are also investing in places like China and India because we see tremendous opportunity.
To close off, we started and you talked to me about risk and reward. Nobody has a crystal ball, but as you and I speak to one another tonight, oil's trading at a 7-year high, and I have many different opinions about a gas and oil crisis, which could be a crisis for the world. To close this conversation, Waleed, are we facing an energy crisis which can cause some kind of existential risk to the growth story?
So here's what I think we are facing. So first of all, it's in nobody's interest to have sustained prices that are very, very high. So everybody understands this, and we all know this. But think about what's been happening over the last couple of years. You have not seen a large amount of investment. Actually, it's been virtually zero in capacity expansions, either in oil or gas or in coal or other forms of hydrocarbons. And so when you see that, and you see some tightness like you're seeing in the markets today, you will see price volatility. You'll see the big run-ups that you're seeing today. And so, do I think that this is going to be a crisis? Unclear. I don't have a crystal ball in front of me, but I do think that for the next little bit of time, because we have not seen the traditional investment in capacity increases and that we've always seen over the past 50 years, there's going to be an impact. Don't know for how long, don't know how high it's going to be, but we're starting to feel that impact.